What's up everyone, and welcome back to the channel. We've got a big one today. The Federal Reserve's next interest rate decision is just around the corner. And you know what that means? The market is holding its breath. Will they hike, will they cut, or will they hold? Whatever they decide, it's going to send ripples through the entire economy. But here's the thing. Instead of panicking, savvy investors see this as a huge opportunity. Volatility creates openings, and if you're positioned correctly, you can come out way ahead. Today, I'm not just talking about short-term trades. I'm looking at the bigger picture, all the way to 2026. I've been digging deep into the data, analyzing trends, and I've identified 3 companies that I believe are exceptionally well positioned to thrive, regardless of the Fed's next move. These aren't just random stock picks. They are strategic choices based on strong fundamentals, solid growth prospects, and resilience in a shifting economic landscape. So, grab a coffee, get comfortable, and let's dive into the 3 stocks you might want to consider adding to your portfolio before the big announcement. First on our list is a company that's a household name, but one that I think is still massively undervalued: Microsoft. Now, you might be thinking, Microsoft? Really? How original. But hear me out. Microsoft isn't just the company that makes Windows and Office anymore. They have transformed into a cloud computing behemoth with their Azure platform. Cloud infrastructure is the backbone of the modern economy. Businesses, big and small, need it to operate. And that demand isn't going anywhere, whether interest rates are at 1% or 5%. What makes Microsoft so compelling right now is its integration of artificial intelligence across its entire product suite. Think about Copilot and Office AI features in Azure, and their strategic partnership with OpenAI. This isn't just a gimmick, it's a massive productivity booster for their customers, creating an incredibly sticky ecosystem. As companies look to become more efficient, especially in a tight economic environment, they're going to lean even more heavily on Microsoft's tools. Their revenue is diversified, their balance sheet is a fortress, and they consistently return value to shareholders through dividends and buybacks. For a long-term hold through 2026, Microsoft offers a fantastic blend of stability and cutting-edge growth. Alright, moving on to our second pick. This one is in a completely different sector, but it shares a key trait with Microsoft. It provides an essential service. I'm talking about United Health Group, ticker UNH. The healthcare sector is famously defensive. People need medical care regardless of what the economy or the Fed is doing. This makes companies like United Health incredibly resilient during times of uncertainty. But it's not just about being a safe haven, it's about growth. United Health is so much more than just an insurance provider. Through its Optum division, it's a powerhouse in healthcare technology, data analytics, and pharmacy benefit management. Optum is the real growth engine here. It's using technology to make healthcare more efficient and personalized, which is a massive, multi-trillion-dollar market. As the population ages and healthcare spending continues to rise, United Health is perfectly positioned to capture a huge slice of that pie. They have a long track record of excellent management, consistent earnings growth, and increasing their dividend. While other sectors might get rocked by interest rate news, United Health's fundamental demand drivers remain firmly in place, making it a stellar pick for the long haul. Now for our third and final stock, let's look at the industrial and energy sector. This is a company that builds the world around us and is crucial for the energy transition. My pick here is Caterpillar, ticker CAT. When you think of Caterpillar, you probably picture those big yellow construction machines. And you're right, they are the undisputed leader in construction and mining equipment. But why is this a smart play before a Fed decision? 2 big reasons: infrastructure and energy. First, there's a global push for infrastructure spending. The US alone has committed trillions to rebuilding roads, bridges, and grids. And guess who sells the equipment to get that work done? Caterpillar. This creates a massive, multi-year backlog of demand that is largely insulated from short-term interest rate fluctuations. Second, their machinery is essential for mining the raw materials needed for everything from EVs to wind turbines. As the world transitions to cleaner energy, the demand for copper, lithium, and other key metals will skyrocket, and Caterpillar's mining division is set to boom. The company has a global footprint, a powerful brand, and is innovating with autonomous and more efficient machinery. It's a classic cyclical stock, but it's at the beginning of several powerful long-term cycles that should carry it well into 2026 and beyond. So, let's do a quick recap. We have Microsoft, the tech giant dominating the future of AI and cloud computing. We have United Health Group, the healthcare leader capitalizing on the non-negotiable need for medical services and technology. And we have Caterpillar, the industrial titan that is literally building the future of infrastructure and the energy transition. Each of these companies operates in a different sector, giving you fantastic diversification. But they all share common strengths. They are leaders in their fields. They have strong, predictable revenue streams. And they are aligned with massive, long-term secular growth trends that transcend the Fed's meeting-to-meeting decisions. Remember, investing is a marathon, not a sprint. The headlines will try to scare you with news about inflation and interest rates. But the real path to building wealth is by identifying world-class companies and holding them for the long term. These 3 picks are my top ideas for doing just that, positioning your portfolio not just for the next few weeks, but for the next few years. As always, this is not financial advice, so please do your own research and due diligence before making any investment decisions. What are your thoughts on these picks? Are there any other companies you're watching ahead of the Fed's announcement? Drop your comments down below. I'd love to hear from you. Thanks so much for watching. If you got any value from this video, please give it a thumbs up and make sure you're subscribed for more content like this. I'll see you in the next one.